Bring in Andrew Kelvin. He's Chief Canada Strategist at TD Securities and a former analyst at the Bank of Canada for more perspective. Nice to see you, Andrew.
Thanks for having me.
First of all, your expectations. What will the Bank of Canada do?
I think they will hike rates by 25 basis points at the upcoming meeting.
And that's pretty much become the consensus. Did it become more of the consensus once we had a stronger than expected jobs report last week?
I think so. There had been maybe a little bit of hesitation after the May jobs number, which had come in a little bit weaker than expected for the first time in quite some time. But I think with the strong addition of jobs in June, I think it was about 60,000 jobs in the month, double the sort of normal trend rate, people became a lot more comfortable with the idea that the Bank of Canada would lift rates again. I would say the world would have had to change pretty dramatically between June and July for the Bank of Canada to not lift rates again at this meeting. I really do look at this July rate hike that I expect as a product of the very strong first half of the year, rather than a reflection of what the next half of 2023 is likely to look like.
And 25 basis points on its own is not transformational, but it's this pace of rate hikes and the bunch of them combined that has everybody wondering about where we go from here. I talked about that so-called soft landing. What do you think happens to the economy now that we are seeing all these interest rate hikes?
So the Bank of Canada is trying to strike this very fine balance. Because on one hand, they don't want to over-tighten and unduly harm the Canadian economy. Yeah. On the other hand, they really don't want to fall behind the curve. I think we've seen over the last few years that trying to predict inflation is maybe a little bit more difficult in this environment than it had been in the past. The bank was caught unawares, I will say, in 2021 as to how persistent inflation would be. And they don't want to repeat what we saw in 2022 again in, let's say, 2024. So they're trying to strike that balance. I will say, in terms of a soft landing or a hard landing, the thing that makes a soft landing most likely, in my view, is simply the fact that we're growing the population of this country so much. Adding more households is a good way to ensure that we avoid a hard landing.
I wonder what it does to the inflation story. I mean, inflation has shown some signs. Everybody debates it, but the headline number in this country did show some signs of easing. We're going to talk later this hour on the U.S. side, where you are seeing some evidence that inflation is cooling. You know, at what point, if, let's say, inflation does start to continue that cooling effort, can the Bank of Canada toggle that line? You know, does that sort of change the story of how long rates stay elevated if they see encouraging signs on that front?
I mean, that's entirely the question. I think talking about rate cuts, like, that really is a conversation for next year. That's a long ways down the road. But I do think that we've seen enough progress that the Bank of Canada can take sort of a wait-and-see approach after this meeting. I don't expect another rate hike in September. I do think 5% will be the peak for this cycle, but that really depends on if we do see the economy start to moderate a bit more in the second half of the year. Wage growth is starting to come lower. If you look at some of the bank surveys, it does suggest that there's maybe not as much tightness in the economy as there was in 2022. So I think the bank will be encouraged by that progress enough that they'll take that wait-and-see approach. But at the end of the day, the economy does need to slow a little bit compared to what it was in the first quarter and the first half of 2023 if the Bank of Canada is going to make this upcoming rate hike their last one.
We're going to get this Bank of Canada decision while the markets are also assessing the inflation picture in the U.S. tomorrow. I had a guest earlier today who suggested that part of this possible 25 basis point hike by the Bank of Canada is to, in some ways, stay in lockstep with the Fed, which is still anticipated to be raising interest rates this month as well. How much of the U.S. policy influences what we do here in Canada?
I think the same factors are influencing the economies in both countries. Both countries had really big pandemic-era stimulus programs. Both countries have tight labor markets. And I think it makes sense that both central banks are going to react to those shocks in the same way. And to the extent that the Fed is likely to be tightening again this month, it makes sense that an environment where the Fed is tightening is probably one where the BOC needs to be looking at tightening as well. The countries can diverge, but, you know, global cycles are global cycles, and Canada is not immune to these things.
So you're anticipating we could be getting to the peak for rates. Would you be surprised, though, if we, over the next few months, still see some of those signs of a quote-unquote resilient economy, putting the Bank of Canada back in a tricky spot?
I wouldn't be surprised at all. I think the last few years have been very humbling for people in my profession, and I was surprised by the resilience in the first half of the year, and I think we have to respect that. Having said that, we are seeing debt service ratios start to creep up a bit, so I do think we could see households maybe be a little bit more cautious through the latter part of the year.
All right. Appreciate it, Andrew.